Good evening. The bond yields in Indian markets have gone up. They have reached 6.6. What basically this says is banks and institutional investors are pushing governments to pay more money for the money they want to borrow. Today, a 10-year yield is at 6.6%. That is, government of India is borrowing at a rate higher than what a home loan rate costs. A home loan is available at 6.5%, whereas government of India is borrowing at 6.6. TAL is a company completely owned by Tata and Sons, which is now going to take over Air India, wanted to borrow 23,000 crores. It put out a tender and several Indian banks participated. They have got offers for 33,000 crores at 4.5%. This is a company that does not have a balance sheet. The company said it cannot give a projection for next 6 months. Only after 6 months they can give any business projections. Banks were falling over each other to lend money at 4.5%. How is it possible that a corporate company is getting finance at rates far cheaper than the government? That is, Tatas are able to borrow at 200 points cheaper than the government. There is also a rumor that the government of India wants to raise 15 lakh crores for LIC. That is the valuation it is seeking. Initially, Nirmala Sitharaman went on record to say the government is not really interested in selling LIC, but what they want is they want public to participate. So a few percentage points is being offered. But today, the law is being amended so that FIIs and FDI can invest 20% of this money. Basically, what the government is trying to do is to sell a family silver which it did not own, which it got through the back door with the money bill without even discussing it in parliament, taking money away from the people by reducing the amount of bonus they will get from 95 to 90. This is what the government is trying to raise money. And this kind of money which is being raised by sacrificing bonus and is being offered to foreigners so that the government can reach its disinvestment target and is trying desperately to sell LIC. Therefore, it is very clear that LIC is operating the stock market under the instructions of the government to keep the market afloat. That is why, even though treasury yields have gone up in America to 1.76, the Dow, the S&P 500, and the Nasdaq have corrected deeply, and markets across the world have corrected deeply. The Indian market is the only one which has not corrected and has recovered majorly from the lows of December. And this cannot last because money is going to get costlier both in United States and India as the US Fed begins to tighten and cut back on its bond program. The money is going to flow from rest of the world into America. This will make borrowing very costly across the world. And even in India, with the inflation going up regularly, the Reserve Bank will be forced to tighten rates. The another major indicator that things are not doing really well is the fact what Hindustan Unilever did today. Hindustan Unilever is the one of the biggest sellers of personal care products from the middle level range to the high end. What Hindustan Unilever did today is raise prices of its personal care products from 3 to 20%. Some products have become 20% costlier. Some have become 3% costlier. Products meant for the lower end have become 20% costlier. This means prices of all products have started to climb. This means inflation is seeping in to the consumer price basket, however much Shaktikanta Das wants to deny it. It is there in auto sector, in consumer goods sector, in personal consumption when FMCG, prices of all products have gone up. In some cases, where the company does not want to cut back on prices and wants to keep a fixed target like Tiger Biscuit at 5 rupees, what they have done is to cut grammages. That is, suppose if you are getting 100 grams of biscuit for 5 rupees, today you will get only 90 grams of biscuit for 5 rupees through the bottom door. Without the consumer realizing that this is happening, the companies are raising prices by 10%. Reserve Bank of India cannot keep these kind of loose monetary policies to support the wealthy and allow prices to rise. The gap between consumer price inflation and wholesale price index is now at 10%. Basically, interest rates acts as gravity to bring back markets to reality and to crush inflation whenever inflationary tendencies rise. You cannot have such low gravitational force when market and asset prices are overheated. America has already indicated that they will increase interest rates at least 3 times next year, and some analysts are predicting there could be a fourth rise. That is, the American interest rates will move from 0 to 1 in 1 year, 4 quarter point hikes. This means treasury yields, which are today at 1.75, will be at 3.5 to 3.6 by the year end. The Reserve Bank will have no option but to also increase interest rates in India, and the government bond yields will move from 6.6 by the same 2% and will touch 8%. When bond yields touch 8%, it cannot be that home loan rates can be at 6.5%. What will happen is home loan rates will also go to 8% by next year. When home loan rates reach 8% next year, it will make it very difficult for people to borrow money. So I do not think that the real estate sector can last. If you are looking at cryptocurrencies, the price of Bitcoin has crashed from 69 to $41,000 today, and it was trading at $39,000 yesterday, a correction of more than 40%. It is clear that all asset prices will correct, and in spite of manipulation by the LIC and other government agencies, Indian stock markets cannot be immune to asset price corrections across the world. Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support.
For hot financial news reviews and economical updates, watch Be Rich. Please don't forget to like, share, and subscribe our channel.